Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time to continue our coverage of the top 5 by market cap of the S&P 500. Today it's going to be Msft, which is Microsoft Corporation. If you don't know what I'm doing on the channel with this now, go back and watch Apple's video last week. I explained it all at the start. Eventually we'll be in a position to cover all 5 in a video each week once I've done these initial videos covering each one individually to explain my count. So that's still a few weeks away yet. I didn't get anything out on YouTube last week, so my apologies for that, but I was down with a cold all week. I'm still a bit snuffly, still a bit under the weather now, and I had to prioritise getting the Patreon live stream done last week and the exclusive video for my paying customers. So by the time I got around to trying to record anything for YouTube, my voice was completely shot, so I didn't get anything out. But back on track this week, feeling better. If I do sniff a bit and snuffle a bit during this, my apologies. It's just one of those things. But we're going to crack on now and do a full explanation of what I think is going on here in Microsoft. Look at various possibilities, how I've drawn the conclusions I've drawn, and then look at the count itself. I'll timestamp all the videos so you can come back and watch it at any time and focus on the specific parts that you want. So here we are on the weekly time frame looking at Msft in log scale. Now, first thing I like to do when starting coverage of a new asset, and I have counted Microsoft before, I'm not new to Microsoft, however, because of this new feature that I'm doing on the channel, I decided I would start from scratch as an opportunity to retest my thinking. So, first thing I like to do is measure the corrective moves on the chart in both time and price. So if we look at all the individual periods of consolidation, our corrective waveforms of 3 wave structures that we can see, all the ones that I consider to be significant in terms of their scale, something really obvious jumps out to us which isn't apparent on a lot of other charts over the same time period, especially in this sector. So what we see is this absolutely disproportionately gigantic correction, which lasted from the tech bubble, start of the collapse of the tech bubble in December 1999, all the way through to March 2009. This is a 20-year correction. Oh, sorry, 10-year correction, excuse me. This is 3,353 days. It's a big one. And there is nothing afterwards which comes even close in scale. Okay, and there's nothing before which comes close in scale. Now that's when we look at the scale in time. When we look at the price corrections, what we see is by far the biggest drawdown as well. We see a 75% collapse in price. The next thing we can identify is that this correction is a sharp correction. It subdivides as 3 waves, and there is no new price extreme featured within those 3 waves, and no retracement of up to 90% of that initial move down. The final move down, whether we say ABC or WXY, however you want to label it, completes beyond where the first wave finished. The B does not expand beyond where the first wave began. So it is a sharp correction. So one day in the future, if you're a pessimist you might believe now, or if you're a bear you might believe now, and I'm not saying you're wrong, I'm just saying if you would have to be pretty pessimistic about future price action, but at some point in the future the counterpart to this correction will be a likely sideways correction, not a sharp. And sideways corrections of the same wave degree are likely to be bigger in time and last longer. So it could be at least the same, 3,300 something days, or it could be 6,000 days, or 5,000 days, or 4,000 days, or 3,501, whatever. And that is going to push us out into the 2030s if it were to happen now. At this moment we would be consolidating again for another decade. Okay? And that, or perhaps longer. And that's if you were to believe that the counterpart to this correction, its alternating counterpart, is about to arrive. Now, It's not my count, specifically, it's not the way I see things. I believe a counterpart to this, after such a huge move, which began really only at the end of the GFC, and this is the wave 1, which led us into this huge wave 2, as I believe that is the only conclusion one can draw. But I believe that the wave 3 is going to be significantly bigger than the wave 1 in time and magnitude. And then when the wave 4 correction comes, it's going to be huge, absolutely huge, and it will take on the form of likely an expanding structure like this when it arrives. I don't think it's here, I think it'll be off in the future, but when it arrives it will make a new price extreme most likely, as its counterpart did not, and that's a rule of alternation. Now, it's not a strict rule in Elliott wave, but it is very desirable and very, very common to occur, so that's what we'd expect to see. So the first thing we're thinking before we make any other measurements is 1 into 2, and this is going to be either grand supercycle. I will not blame you for labelling a decade-long correction grand supercycle, but I think supercycle is sufficient to explain a decade-long correction. Right, and that's the first thing I've noticed. 75% decline, 3,300 day correction. That's the singular feature of this entire chart above anything else. Moving averages confirm, as part of our check that we often do on the weekly, monthly and daily time frame. If we have adequate price information, we often can't come out to the monthly time frame, but with price data going back to 1986 we can. So let's just do that first. What we see with this gigantic 1-2 is a test of the 250 day monthly average. Here we pierce it. We are currently, to give you an idea of scale of how severe a correction this was, we would have to collapse another 71% to retest this. Now, if we are at supercycle or grand supercycle degree, then a test of the 250 on the monthly time frame makes sense. A retest of it would also make sense. However, if we are dealing with a sideways correction, perhaps we won't get all the way to it. It might be shallower than its sharp counterpart, but still, let's come down to the weekly time frame. On the weekly time frame, we can see that we pierced the 250, trade significantly below it, and subsequent corrective waves trade through it as well, and then trade to it, and then move above the 60 and stay above the 60. So you can see what I'm thinking already, can't you? One big wave, one smaller wave, one smaller still, one smaller still, and one smaller still. We're getting an extension. This is the 1, this is the 2, we're beginning our 3. Okay, and this is going to take us, well, who knows how long this is going to last for and how high it's going to go. All we know is that as the 3, 4, 3, 4 and 3, 4 of intermediate, primary and cycle degree arrive, the corrections are going to get bigger and bigger and bigger, longer and longer and longer, and more severe. So we've got a lot of sideways chop to come over the next few years, but we've also got a lot of price moves to make higher over the next few years as well, based on this opinion. So given the only data we currently have is the data we have here on the chart, so if we take the wave 1 here and then we come out to where our wave 3 is, we can see that currently, if this is 1 into 2 into 3, a 3 is going to be the longest, biggest, most powerful wave of all the 3 motive waves, 1, 3 and 5, with the most common extension occurrence within the wave 3, which we think we have isolated with all of this overlapping nesting price structure, suggests that it is an extended wave 3. It has not yet reached the length of our wave 1. So the more bearish idea of 1, 2, 3, this is the top of a major supercycle wave, this doesn't really fit. That wave 3 would be this short in time. So I don't tend to go with that idea. Next thing I like to do after I've looked at the moving averages, we can see that a sustained move above the 60, we've measured the distance to the 250, is I like to look for possible 3s to correspond. We've got 1 and 2, we don't see anything 3, 4 that corresponds with this scale, but we've got potential 1s and 2s all over the place here. Right, so then I look for their corresponding counterparts in both MACD and RSI readings and how they fit within the greater trend on the OBV as well, and then see where the price structure or subwave count falls from that point as I come to these levels, and see if I can find a subsequent count. Now I don't force fit it, I let it occur naturally and I move around if I have to, but these readings, the extreme RSI readings, the peaks in the OBV, the corrections and the sequencing in terms of getting larger, suggest that these are the waves of the 1 2 1 2 1 2 3 4 3 4 3 4 that we're going into. Right. So I look for those little things. Now this is not rocket science, and it is not a certainty either. These are just little things I like to look for. And once I've done that, I can then start thinking, well, now that I've done that, let's now look at some geometry. So, if this is a supercycle degree wave, let's find something that fits it. So I get some pitchforks on the chart next, and I start having a think about the geometry of the chart. Now, I put these down somewhere. I think I put them in here. Yes, I have. So let's call this folder pitchforks. Let's go with our supercycle wave degree here. Right. So as you can see, we've been in the lower half, even with this huge move. Let's just get an idea of just how big this is. Even with this huge move up of, I'll tell you what, let's just move that down to here to make sure it's precise. 2,248% gain, 341 spots, $16. We still haven't broken into the upper half of the pitchfork. So once again, further evidence, I feel, that this is not 1, 2, 3, 4. I would expect 3 and 4 to be here on the pitchfork, not here. That would strike me as odd, that this is not the same wave degree. So I would expect to see 3 and 4 testing the median line from above to hold it, or break it to test the bottom of the pitchfork and stay within this swing. Excuse me if I'm sniffing, I don't read to, my nose is still running a bit. But as you can see, my thinking is quite simple based on the geometry here, that we've had a test of the median line from underneath, and we have completed a significant move up from underneath, but it is a subwave of this larger move. That's my thinking. So let's now remove that pitchfork for the moment. We don't need it. We don't need the price accumulation or decline. Okay, so now let's look at a couple of other pitchforks as well. I have 2 others. Cycle wave degree, I'm calling this, and primary wave degree. I honestly can't decide which I prefer here. They're so similar. Cycle degree, as I've labelled it, so if this is 1 and 2, you'll see that this is 1 and 2. It's smaller than this significantly, but it's significantly bigger than any of the following corrections, so I consider it to be 1 less wave degree. There is another count we will cover before we go, which suggests it could be even more bullish long term, but potentially more devastating short term in terms of corrective potential. However, we'll talk about that in a little while. With this, we see the typical behaviour of an extension within the pitchfork, which is we break the bottom of the pitchfork again and again and again before we accelerate through it. Now this is very much the price action of a extension. We have a 1 and a 2, 1 and a 2, a 1 and a 2, a 1 and a 2, and then we fly. So what you tend to find is when we take a pitchfork of this initial pivot and then we go into an original pitchfork, what we tend to see is that the price action breaks the pitchfork, breaks the pitchfork, breaks the pitchfork, and then accelerates into it. And that's because rather than just going 1, 2, 3, we're getting this large wave 3 extension instead, with all this overlapping price data, which pushes us out further. So the wave degree lower should be another couple of, blips in terms of breaking it away from the first one was. So this is another wave degree, and as you can see, we get 2 breaks of the lower part of the pitchfork. So this is 2 more 1-2s of a smaller degree. So that fits snugly as the next wave degree. Now if I use the OBV for a moment and point out that the trend within the OBV that's broken, here's our initial larger move here of 1 and 2, right? And then we can see that it's the trend underneath that in the next wave degree. If we take all of those lows all the way from 2013 to present day, that's the trend that's broken. Right. And if we were to do the same with price, you can see. So that's the trend that's broken. And as we can see, we got a back test of the 60 exponential weekly moving average. Down, up, back test it, rejection from this resistance level, and now moving lower, maybe to test the 250. So that fits the primary degree pitchfork that I put in, because it retests the median line currently. Here's the median line test coming back into the fork, could easily break down through to the bottom of it to test the 250 and still be within this same wave degree. That's my thinking at the moment. Right, so now that we've covered all of that, we've covered our moving averages, we've covered our geometry now, let's bring in our corrections again, price corrections in time, and let's show you a simplified version of the count. So all I've done is use these corrections of overlapping price data, the 1 2 1 2 overlap here and the 1 2 1 2 overlap here, to basically create this wave free extension. So let's bring in the simple primary, and you can see now if I remove those how it works. 1 2 1 2 1 2 1 2 1 2 3 4 3 4 3 4. So we're going to see bigger waves here and smaller waves here, and then bigger waves here, because that's how it works. As we go through the wave degrees, you get an extension of a wave 3 looks like this: bum 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 dun dun, and then they get bigger, bum bum, like that, as they go into their 3 4 3 4 3 4. So we've got some serious ass chop to come over the coming decade. The luxury of being in the main part of the three has probably come and gone, but the biggest price gains may yet to come. But we are going to see 3 4 3 4 3. We're going to get all of it expanding up the top here, and get some huge swings higher, but some huge swings lower. A period of great upheaval globally, and great upheaval in price and increase in volatility, which is how a market tends to top out on the longer term. So we will wait and see how that plays out, but that's the kind of price action we're expecting to unfold now. But with that comes great opportunities, because there will be many highs and many lows to come. Okay, selling and buying opportunities on larger wave degrees, not to be sniffed at. Okay, so now let's come into the smaller time frame and show you the more detailed count. Come down to the daily, zoom in a little bit, and let's look at price data from 2018 onwards roughly. Now let's bring up the more detailed count. So here we have the count. Now, not in its most detailed state, because we are still on the day time frame. If we come in closer to the 8 hour, you can see we get all of the subwaves, but then it gets really messy. So let's just stay out for a moment. As we come into these 3 4 3 4 3 4, as these start to get larger in their in the size of their corrections, and look at the most recent count. So first thing I like to do is have some supply and demand and some support and resistance added to the chart. Okay, so I can get an idea of what levels to look for. We've come back into a rough area of support. We've got larger areas to test, so I also use my FRVPs here to look for points of control, volume nodes, and combine it with support and resistance. Prior highs becoming prior resistance, becoming prior support. Okay, prior highs becoming support, prior highs and lows becoming support. So we've got a series of levels below us. So as you can see, I'm prepared to completely entertain the idea of price going considerably lower from here and still fitting the longer term logarithmic count without any issues. Now we have a level at 228.91, 187.63, 140.73. These are all very rough. Support is very often not a strict flat line. It can sometimes be, it can often be, but sometimes it's more of a range. So we've got plenty of support below us. We've got plenty of volume traded in previous pullbacks as well, especially the COVID low and the 1-2 of that move up. And we can see that we've got demand here as well. Prices moved up to a level, pulled back, found buyers and continued higher. So we've still got a lot of support below us, okay, before things completely break down, or if they break down at all. So if you want to take a moment, take a moment to look at those levels and memorize them. Now come back and watch this video whenever you like. We've also got resistance above us from previous highs, and previous highs here as well, which we're going to wait to see if we do rally, if these provide resistance. So the best I can make of it so far, and I'm totally open to other ideas, and I'm still considering a few myself before we finish the video with an uber bear count and an uber bullish count outside of this primary as alternates. Quick rundown of how I see the move down from the high. Now for here, let's just come down to the 8 hour. Let's come down to the 4 hour. Actually, and full screen the chart for a moment. Now, I'm going to do this in line to try and make it a little clearer. This move off of the high, this is our high up here. This move comes down in 3 waves, and then this move is 3 waves. Okay, so we're left with either a truncated high, which I'm not going to write off completely, it's just less likely, or we begin the first move down with a zigzag, bum bum bum, like so. Okay, and then we have another zigzag, we have an X wave, excuse me, not a zigzag, which is a flat pattern, 3 3 5. Now I would argue that you can see quite clearly here that this is a 3-wave structure and this is a 3-wave structure. This is an unbroken line up, so it could easily be an impulse. Okay. So 3 down, 3 3 5 back, that's a zigzag, that's a flat, that's a W, that's an X. The next move we have down, once again, clearly subdivides as 3, not 5, so this is another zigzag, and then we get yet another 3-wave, 3-wave, 5-wave move, where the C completes higher than the A, and the B goes beyond where the A began. It's an expanded flat. This is our next X wave. As price is correcting over time and the situation is deteriorating, the volatility is increasing and the corrective moves are becoming more aggressive, larger and more violent. Now if you think about the macroeconomic backdrop to this and geopolitical backdrop to this, that makes total sense. Things appear to not be great, things appear to be pretty bad, things appear to be totally shit, and things get gradually worse. So every time this correction has an opportunity to end, it instead extends and gets worse. Now if you think about the deterioration of events since the high in November 21, that fits pretty nicely. Tightening monetary conditions, rising rates, global energy crisis, inflation, war in Europe, it all kind of adds up to things just gradually becoming more and more nasty over time. So that's how I see the correction so far. Now this, if it's getting much bigger, this could be 1 into 2 into 3 into 4 into 5 into A into B into C, and this Z could be way WXYXZ, this Z could be way down here. Okay, but I'm giving it the benefit of the doubt that we're into a final ABC here. A, B and C to come, and that this is likely 1 and 2, 3 and 4 and 5. So this could still be a very long extended C within a long Z, which pushes price below the Y, and the Y push price below the W, and the X waves descend in order. So this seems to be making perfect sense as a downward move. Now, as a series of zigzags. Now we do have parallel channel here in log time frame. We've come down to the bottom of this parallel channel on the Friday and we've bounced. Just for the moment, we don't know if we're bouncing and we're done. It is possible that's the C. Okay, it's possible that is the C, that is the Z. We've brought the Z lower than the Y and we might be done. Now I'm not so sure that's the case because I'm getting 5 down here. The C would be shorter than the A, Okay, I can live with that. The C goes beyond the A, that's good. But there doesn't seem to be any clear 5-wave subdivision here when I come down to a smaller time frame. So I'm going to give it the benefit of the doubt of it actually breaking this downward trend and getting more severe. Okay, but it could have bottomed. Have to be aware of that as a possibility. Alright, and that's the best I can do with this count in the meantime. W, X, Y, X, Z. Now that doesn't mean that's the only count. We're going to look at an alternative now, and then we're going to come out and have a look at the longer time frame alternates of how to potentially interpret all of this data, because for each Elliottian and for each person who looks at a chart which goes all the way back to the late 80s, you're going to have some pretty variable ideas. That's the nature of a very subjective set of rules which are clearly defined, but a person is going to see things differently from one another. It's just the way it goes. So let's now see, while we're here, if there's an alternate way of counting it that we can come up with. So, one other idea, but there is an issue with it, is that it's an expanding leading diagonal, and it is a motive wave from the high, and therefore should break down into a series of zigzags. Okay, so here's the first problem with that, is let's just label it and we'll measure it. So 1, 2, 3, 4, 5. Like so. And let's say this is minor degree. Now, what do we like about it? Let's be fair. The 3 is longer than the 1. Okay. The 4 is deeper than the 2. Okay. And the 5 is just longer than the 3. In fact, this could even be the 5 out here, if that's another zigzag. Right. Possibly. Can't quite see how. Maybe got an ending diagonal here. I think that still subdivides better as a zigzag. But either way, we can get an expanding diagonal into here. Now, how do the trend lines look? Not marvellous. Now let's look at it in line for a moment. 3 still doesn't come to a nice position. Let's look at the top end of the 2 to the 4. That's okay. The 1 to the 3 is not particularly attractive. Right, now, next issue. Zigzag down into the 1, no problem. Flat into the 2, problem. Should subdivide as zigzag, 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 zigzag. All the corrections as well as the motive structures. So, or the whole motive structure, I should say, corrective elements and the motive elements should all break down into zigzags. So 1, zigzag, 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 zigzag. And we get a flat here which kind of ruins that. If we were to take the point of contact on the trend line as the 3, 1, 2, 3, 4, makes it look much prettier as a flat, as an expanding diagonal, I should say, 1, 2, 3, 4. But then we get another flat pattern for the 4. So the zigzag, 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 zigzag idea is breaking down completely at this point as a leading expanding diagonal. So this is something I'm not particularly fond of, but I'm sure if you can, what you need to be able to solve, if you want this to be right, is you either need to get this to be a zigzag somehow, which I can't see how. You also need to get this to be a zigzag. I can see that, but we get the damage with the break of the trend line now, which I don't like. Or you need to somehow get this to be motive as an impulse. So 5 here and 5 here. I struggle with that as well, because at least that way you could get 5 waves down as an impulse with no overlap. Right. On that note, there's the second problem with the expanding diagonal we have here. The 4 does not come back into later price 1 territory. That's a big no-no. That should happen. The 4 should overlap the 1. So there's a lot going against the idea of an expanding diagonal. So I have not counted that up. I've dismissed that because it just doesn't fit. 4 doesn't overlap 1. It doesn't subdivide as zigzags. The wave, it doesn't follow the trend lines well. It's just a poor fit overall. And as I can't count 5 waves in these 3 wave moves because they're not there for me, then I can't count it as an impulse either. So a series of zigzags seems to be the only thing it can be. Now, a series of zigzags, a series of threes into a larger corrective structure doesn't mean that it's going to complete down here or down here. All of this could be noise just to come back to here, just to come down to here. We have to remember we're at that larger primary wave degree correction. Yes, 3, 4 to here could be enough, but it could be something much more deceptive like this. And it's not going to get any cleaner trying to figure it out. So for the meantime, that's the best correction I've got. We're heading lower and another zigzag lower, and it's a series of increasingly aggressive zigzags because the situation is deteriorating over time and the chart is filling out itself to fit those fit that situation over time. So that's essentially the best I can do with it. So let's just bring it back up. A series of zigzags in a W, X, Y, X, Z. Okay, so now let's come back out and look at some alternative ideas for the long term. I should have probably done this first, but I thought I'd leave this till last. Right. So if you don't believe that this is a subwave of a larger wave degree, but you believe that this is the larger wave degree, then your count is going to be, quite simply, this. Okay? You have a 1 into a 2. This is the corresponding 3. Okay? And then now we will get a 4, which will be at least the same size as the 2. 3,300 odd days, probably longer, being a sideways structure. Okay, and we are entering a nightmarish period of long-term consolidation in the US markets. Okay, which will go on for a very long time, decade plus easily, before we go to new highs. That's not the end of the world. If you're in your 20s, that means you'll be in your 30s picking up Microsoft at a fraction of what it costs today, and you'll be off to the moon. So it's not always bad. We don't know what inflation is going to do in the future. I have my theories. I've spoken about them with our members in terms of how I see things playing out over the longer term. But either way, this is the more bearish count, that we've had a larger wave degree completion at 3. Now, I've already pointed out my issues with this. Relative, there's no point taking a Fibonacci extension measurement of the wave 3 here in log, because we can't even get to 1-to-1, which is all the way up here at $10,500 a share. 1618 would be the normal extension. If it doesn't apply in log, in linear it comes past the 423.6. Okay, so if this is exponential growth, that strikes me as odd. Right, the next thing which strikes me as odd is the fact that the wave 3 was shorter than our collective price data for wave 1 of the same degree. That strikes me as peculiar as well. What we'd expect to see is 1, 2, 3, 4, 5. That's kind of the structure we expect to see with an impulse. So to have this longer in time frame than this, that seems peculiar to me. So that's why I'm not a fan of this idea. Well, I'm not going to write it off. The issue you have is getting if that's 1 and 2, right, and that's 1 and 2, and that's 1 and 2, you got problems getting 3, 4, 3, 4, 3, 4 into supercycle degree 3 because they're getting too small. There's nothing significant enough to fit in here. It's a bit of a struggle to get it to fit a smaller wave degree, let alone something this big. So there you go, but I'm not going to write it off completely. That's your uber bear count, that we've just entered a 10 plus year, even longer period of consolidation. I find that a little peculiar from a fundamental perspective, because when I look at, for example, what I know about the rest of the world, their economies, their demographics, where they're going to be economically in the next 20 years, America is still, the US market is still by far the best bet, in my opinion. With perhaps India as an emerging market being a solid consideration. China, the idea of Chinese domination, with the collapse in demographics that all of the scientific projections point to by 2050, I think that's a load of nonsense. But agree to disagree, that's fair enough. So I think America is still going to be the home of capital inflows for a very long time to come. So that's the uber bearish count. Now let's look at an uber bullish count. My biggest concern with my own count is that this 1-2 doesn't marry up too well with this being a 1-2 of a lesser degree. This arguably is too small to be a cycle wave to this super cycle wave. That's my problem with my own count. But the only way around it is to count all of this as a subwave of this at one lesser degree that's now complete. What does that mean? 1, 2 super cycle degree, 1, 2 cycle degree. What this means, if this is correct, is you are going to get a more severe correction now, right, than the 3-4 idea, but you're only just into the second pivot of a larger wave 3. You've got 3-4, 3-4, 3-4 at least to come, right, which is stupendous opportunity. Okay, it seems too good to be true, but we have to consider, if this is a 1-2, perhaps we haven't seen the counterpart of this yet. What would half of this time frame look like? There's 3,300. So let's go over to, there we go, roughly half the size. If we got a wave degree that was half the size, this could still take us out into the mid 2020s, 2026. So that's still bearish as hell, but what it means is that you would end up with a correction which looked more believable at a smaller wave degree. 1-2 at super cycle, 1-2 at cycle, right? But it doesn't have to be that deep or that long. But there you go. Now all of a sudden, that looks like it could be one lesser degree than that. But please understand how bullish that is long term. That's crazy. Because that now means 1-2, 1-2, 3 at cycle degree, within the 3 at super cycle degree, with 4 and 4 and 5 and 5 to come. But let's just label it up because it's a possibility, right? I think about my own future at times and see when I look at charts like this, and I think about my kids and where they're going to be in 10 years, it's 15 years from now, and I think, you know what, it's not all bad if things break down over the long term because somebody else gets to pick it up and run with the ball for a while, best part of a decade or maybe even a generation if a count like this was true. But that's all I'm going to label. I don't think labelling any more than that is necessary at the moment. It's such a far out idea. Uber bull. Alright then, so we've covered the recent price action. We'll do that more frequently as we come into completing all the top 5 stocks of the S&P 500. And then once I've completed Google and Amazon and Tesla to come, we'll just do the short-term updates each week. So got those 3 charts to look forward to. I hope you've enjoyed this. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, especially during times like recently when I haven't been able to output the usual amount of work. And if you are interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, see what you can expect for your money. And we'd love to have you. You know, feel free to sign up. I would suggest though waiting to the start of next month so you don't get double charged by Patreon. Alright guys, and if you're not following me yet on Twitter, there's a link in the description box below as well. Please do so. Take care of yourselves. I'll be back with you shortly. All the best. Bye bye.